evening and welcome to the Australian Stock Market Show. What an interesting time it is with Victoria now out of lockdown, whilst other states have either moved into it or are considering moving that way. We do hope you're all staying safe. For now, let's get into something more positive and we hope far more exciting for you as you settle down to the next hour while we take you on a journey to learn and be informed on the stock market and trading. In tonight's show, we'll cover many interesting stocks, including Woolworths, Wesfarmers, Milton Corp, Soul Pattinson's, C-Link, Ramsay Healthcare and more. We'll also answer your questions as we bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is, will Woolworths rise like Wesfarmers following the demerger? Hello, I'm Janine Cox, your host, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators. Hello.
Hey,
how are you going?
I'm very good.
That's good. You're looking really calm.
I am. I'm very relaxed. Yeah, very, 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 very relaxed. We're out of lockdown and everybody else is in it. Almost.
Is that why you're looking so relaxed?
Just brings a new meaning to Magnetic Island. They've just put Magnetic Island in lockdown.
Wow.
Means you can't get away from it. You just keep drawn back to it. They won't let you off.
There you go.
I just thought that was just a bit of a funny, interesting thing, wasn't it? No,
It's
everybody
a
else
strange
is in
observation.
lockdown.
Why did you bring up that?
Oh, I just thought it was something stupid I could say. It's like, but hey, it just seems really a strange situation. Melbourne's got freedom and everybody else is getting locked down.
No,
It's
it's
like,
strange.
hey, what happened with the world? It's gone upside down. Normally it's us. And
Victoria's normally, we're the Mexicans, aren't we?
yeah, well, I tell everybody we have lockdown so nobody else can come in, not so that we can't get out. So we want it all to ourselves.
Yeah, that's
we want
right.
the ski fields to ourselves. We want the surf beaches to ourselves. We want the coffee to ourselves.
I think we want the stock market to ourselves as well, don't we?
Okay.
Wouldn't work.
No. It probably wouldn't work. Anyway, Janine, that after continually being inundated with far too many email questions to handle on the show, in the past 2 weeks, it has been somewhat the opposite, which is often an indication of what's occurring on the stock market at the time. Now, you see, when things are bullish, everyone is making money, and we always get lots and lots of questions, especially on stocks, or more specifically, people wanting to buy stocks. And when times are more challenging, people really do tend to retreat.
This is the exact opposite of what they should be doing. Ask questions while you are not concerned about the shares that you hold, and don't wait until they're falling. And if you're being challenged, then this is a huge signpost that you need to learn, not withdraw. Smart traders understand this and so take advantage through building their knowledge and skills.
Now, Thomas Edison quoted he had a famous saying that opportunity is missed by many because it's dressed in overalls and looks like hard work. Now, I must say that when it comes to the stock market, and especially trading, this statement is absolutely true, and the majority actually don't realise the opportunity that they are missing out by not taking the time to learn to trade properly.
Yeah, I totally agree with you, as you really underestimate the value a proper education gives you. And before we move on, I just wanted to say that each week we receive some great email questions, and as always, we give preference to those who support our channel and subscribe. So before we get into the next part of the show, I'd like you to invite you to take a moment to click on that subscribe button now and show your appreciation and support for the team that is bringing you tonight's show. Moving on, it is the 5th Tuesday in the month, and this means we look at a hot tip. Hooray! Let's get into the charts, shall we?
Now, on your screen right now is the stock that I've actually chosen. For the first time, I think this is the first time ever I've chosen a stock, isn't it?
Wow, I'm excited.
Yeah. I'm just asking you to confirm.
I've got a hot tip for you. Don't run across an open field with your mouth open.
Why not?
Because you'll be picking a few bugs out of your teeth.
Let's go and look at the stock, because that's more interesting than
Don't
what
you
that
like
was.
Hills Are Alive with the sound of music? I've seen you doing that action before.
Come on. Let's get onto something more serious. Let's get onto the stock, okay? So we're looking at Atomos. Now,
Yes.
I've been watching this stock for many, many, many months, actually. Since it took this big dive through. So I've been watching it since about March last year, but I did watch this rise coming up here, and I really did want to see it have a lot more certainty. But I want to bring up the monthly chart. Now, this is an Australian company. It is a Melbourne-based company. It's in the video space. It's in the, what do you call it, multimedia type space, because it builds stuff for studios, that stuff, and it sells stuff worldwide. It really does. So sort of like Rode Microphones are an international business, but are Australian, and there's a few others, like Blackmagic is another Australian company in the same space, but all different.
Right.
These guys are really good. They are in Melbourne, and they make really, really good gear. And they've just released some more new gear, which I think will do very, very well in in the space they're after. But then I'm not an expert on that field. So, but you do some research. But what I like about it is we're seeing this big move, really sideways move. Now, often this is frustrating for investors who might have jumped in on this one and thinking, oh, I've got this stock. And now they've been hanging on for 1, 2, 3, 4, 5, 6, 7 months, and they're not getting anywhere. So in this period of time, you see investors that jumped in here thinking they're getting a great stock that was going to continue to rise. They're getting a bit frustrated right now. But what I like about it is it's hit this ceiling. It hasn't gone above this level, which if you look there, that's sitting at $1.06. But it's not really going below this level, which is around 82 cents.
Actually, just check that again. What's the high of that outside bar?
This one.
Yeah.
Yeah, that one there. If I look at it, that's $1.16.
Yeah, so it did go above $1.06.
Oh, sorry, it hasn't closed above it. I meant to clarify.
I'm just keeping an eye on you here.
Oh, geez, you're keeping me honest, aren't you? And it hasn't gone pretty much below that high of that bar, which is you're looking at there is 82 cents. So it's holding up really, really nicely, just going sideways there. Now I'm going to put a couple of other things on this, and what I want to do is put this one on first, and you can see from its all-time high down to this low in March 2020 with the COVID low, it fell 86.81% on that. And this low here, if we look at it there down, come on, give me the price.
So it went below
there.
its listing price?
Yes, so it went down to 24 cents, and obviously it hit the stock exchange there at 45 cents. So it's nearly half of what it hit.
Now, what do we say about stocks when they list?
Yeah, we're saying within the first 12 months, list 50% of the time, you had to buy it cheaper in the next 12 months than what it does when it lists. So obviously it listed back through here, and that was December 2018, and there's obviously March 2020.
And
so
it was COVID, so that was just unfortunate for them, wasn't it?
It was just unfortunate. That's what I was thinking, because it was trending really nicely and doing okay up until then. But what you see is looking at this, it's saying it's fallen 80-something%, and generally when something falls around 90%, it will start to find some support. So that's a real general rule of thumb that people can actually use. If something's fallen from $10 to $1, it's generally going to find support and start to move up. But occasionally you'll see them go along sideways.
So where did you say their stuff's made?
I'm not sure where they make it. It's a Melbourne-based company. I'm not sure whether they make it all in Melbourne or they make it offshore.
Right.
I haven't gone right into their manufacturing practices and everything else, but I have looked at the company. I've looked at their website. We actually own some of their gear here that we use pretty much on a weekly basis. We use, and it's really good stuff.
Yep.
So, and like Rode Microphones, they are becoming known around the world. Like if you go and look at a lot of production houses, etc., and you see some of these behind-scenes footage, you'll see Rode Microphones everywhere. I'm talking to people all the time offshore, and they're using Rode Microphones.
Wow.
So you're seeing that.
That's great that a Melbourne-based company is getting this sort of quality.
Well, there's a couple of them. Yeah, I mean, obviously Blackmagic is another company that makes some brilliant gear, and I believe Blackmagic is Queensland-based. They might be Sydney, but I think it might be Queensland, but I'm not sure. No. They've just
now, I don't want you to get into a conversation about the tech stuff, because then you'll just go off in another tangent. Can we
The other thing I want to share with people is just a bit of a price projection of where I think price is going to go.
Yeah.
Now, if it breaks above this line through here and you get a solid breakthrough and we get it closing above it on a month, then I would suggest it's going to keep going. So the next levels are 155 and 193.
Okay.
But I actually think it can go a little bit higher. I can think it can get up to $2.30, somewhere in around that bracket, if it does break through this side level. So you don't need to jump early. And that's why I'm suggesting that you probably even wait till it gets through this $1.16 mark, which is the high of this outside bar. So
you're saying patience?
Just patience, because you may be buying into this sideways move before it breaks out.
But what's the liquidity of this like? Because that could influence how fast it goes through that level.
It's not a big liquid stock, but it's not super, super small, because you're looking at the current month, it's about 4 million shares, so it's about 1 million shares a week. So it's not a big stock, but it's a really good, solid
But because of that, it could shoot through that level, meaning that it could wipe out some of the profit by the time people see it.
But there's tons of room to profit. When you're talking about the stock sitting at 93 cents and even $1.16, getting to $1.55, that's 40-odd%. There's nearly doubling your money. So there's plenty of room to profit if it takes off. So the other thing I wanted to start look at, I want to bring it down onto the weekly chart now and just show people the weekly chart. So now we've looked at the monthly chart. On the weekly chart, if I bring it up, what I wanted to show people is obviously this move down from its all-time high, which is back there at $1.82. So it's been up at $1.20 before the COVID meltdown, and this is the COVID meltdown from that point of view. But what it's done is it's fallen from that high to that low. Now this point here, this $1.03, and I won't explain it to everybody, but this is the strongest level of resistance this stock's got right at this very moment. There is no stronger level than this. Now, our students will understand why, but for everybody watching, if this stock goes through this level and it stays above this, then it's blue skies above it, in my view. At the moment, as you can see there, if I pull that up, you can see how it struggles. It sort of breaks through, comes, and it bangs back again. Breaks through, then it comes back again, and it's not having got big strong closes too much above this, and it's struggling. So if it does get through this and closes above this, and I would more look like it not just on 1 week, I'd be looking at it for a couple of weeks just to make sure, given it a bit of space to move. If it gets through that $1.03 level and it's comfortably above it and stays above it, then I'd be comfortable to say, yeah, this is going up through to that $1.55 to $2 mark over the probably, and if it does this in the next month or so, then I would say we do that in the next year.
Okay.
I mean, it is a nice looking stock.
So that's your hot tip for the week, but what if it falls below that prior trough?
Well, you can tell them that. I'm just bullish. It's the hot tip.
All right.
I'm not giving them a boat anchor.
Giving them the risk management side of this. If always look at the downside as well, which Dale does also. We've got to keep it light.
I'm trying to give them FOMO.
Okay, so the low here is 86 cents. If the stock goes through that, then there's a risk to the downside that it could keep falling. So just be mindful of that and look at the risk that you're taking. We're not suggesting that you buy this stock. You need to do your own analysis, of course, but there's always the downside to consider, isn't there?
Yeah, and you're looking at it, when you're looking at, we often say that to people, if you look at that difference between there, you can see there's 18. If I drag that up like that, you'll see it better. But there's 18% between here and that low there and that high there. So there's plenty of gains or losses to be had depending on when you actually enter in it. So this is why people need to be a little bit more careful about entering and why you need to wait for it to move through that level. So that's my take on Atomos.
Beautiful. That's all from us about Atomos. Now it's time to get into our first email for the night.
Okay, our first email tonight is from somebody called Ken, who says, "Hi, Dale and Janine. Hi, I'm Ken. Thanks, Ken, for sending your email in. I bought and read Dale's Accelerate Your Wealth, and it really opened my eyes to the world of investing. A great read. I've owned shares in Milton Corporation for several years, which has basically been moving sideways until today, Tuesday, the 22nd of June. Where volume spiked and share price suddenly rose 16% from $5 to $5.80. Now, I read that Sol Patterson's is acquiring Milton, and that Milton's directors have unanimously recommended the deal. Now, Milton shareholders will receive Sol Patterson shares as their payment, with shares to be valued at a 10% premium to the adjusted net tangible assets. Based on your experiences, would you be able to tell me if this sounds like a good offer for me as a Milton shareholder? Thanks for the advice and for all the free content you guys provide us each and every week. It's not free, Ken. You've got to subscribe. That's hard.
All right. Now, can we start on the stocks? That was a nice thumbs up, though.
It was, but he's subscribing.
Wonderful.
Okay, I'll shut up.
All right. Now, looking at the chart there, I've got the monthly chart on the left-hand side of Milton.
Yes.
And on the right-hand side, I've got the weekly chart, of course. That's the standard format we use. Now, on the left-hand side, looking at Milton, what would you say about if you take that? If you
can use the mouse, it's okay. It's fine.
You're
It hasn't
messing
got
up my
gems
chart.
on it.
Goodness me! Can somebody come and control him for a minute?
Well, you use the mouse.
Look, see this level across here?
No.
Right, you do. Now, see that level across there?
Yep.
That's the strongest level on that stock on a high point of view, right?
Okay,
From peaks, because there are so many times that it came to that level and then turned and fell away.
Yep.
Now, look at what the stock has done since COVID. It's moved up so strongly. There's a higher low there, and then it's moved up again before the announcement. Now, if they kept everything squeaky clean, which you have to assume that they did, and that the stock wasn't rising prior to that based on that information, then this stock was already going to go.
This stock was already going to go up.
So the thing is, the fact that they're offering only a 10% premium to the share price, I think that's too low. Way too low for the future value of this stock, given the way that it's unfolded. In fact, any stock that can get through a level, and this was one thing that really annoys me when I have looked at so many takeover offers happening and making comments on what goes on, is to have a look from a technical perspective and see if it makes sense, not just from the fundamentals, because things can change in the marketplace, obviously.
So why would the board actually approve the takeover?
But maybe that's all they know now. Like maybe people only know what they know, but when you're looking at it from a charting point of view, you would see that for this stock to set up like that, to get to that high and look so strong, provided everything was kept, quiet and people didn't know about it, then that stock should have gone through the all-time high anyway.
Okay, so that was one part of his question, saying, do you think it was a good deal for him? And you're basically saying probably...
I can't say whether it's a good deal for him because he's got the stock. He's not going to have a choice.
He's not got a choice. He's going to get Soul Pattinson's.
If the board have approved it, chances are that most of the shareholders will, unless the Shareholders Association comes out and says, look, they don't think that shareholders should accept it and they get enough people behind that. But looking at the chart, I'd have to say, we're in a post-COVID environment where anything can happen. And if stocks are looking strong, it means they can always keep going up. So I think probably they could have paid more for that, based just looking at it from a technical point of view, not even looking at the fundamentals, just looking at what the future value could be in terms of the pattern and how the chart could unfold.
So he's got two choices right now. Ken's got two choices. One, he sells Milton now and doesn't participate in the takeover by Soul Pattinson's, and he gets a premium for his shares.
Yep.
Okay, so that's one. Or he waits for that to happen and then he gets Soul Pattinson shares. So right now, the actual choice Ken has is, does he believe Soul Pattinson is a good stock to have in his portfolio? And it is a good stock.
Oh, it's a really good stock.
So that's the question is, get your money now and run and go somewhere else, or hang on and wait for the whole everything, the dust to settle and have Soul Pattinson shares. So do you want to have a look? Are we going to have a look at Soul Pattinson shares?
Yeah, just to complete the story, I think we need to. So Soul Pattinson, as you're saying, it's a really good stock. Looks lovely. It also has gone through a prior all-time high back here in 2018. So that's a good sign for the stock going forward. Doesn't mean it won't come back, because often stocks, when they prove to be successful in taking over a company, the share price often falls on those stocks afterwards. So that might happen for a while on the company stock. But look, I mean, you have to weigh it up in terms of your own personal view on things too. But just generally, if the board has said that they're accepting the takeover, if it's a unanimous decision, and then if shareholders vote, you don't have a choice as to what you're going to do.
He doesn't have a choice. It's done.
So your only choice is, like you say, whether you sell before to get out of it so you're not in it. But generally, if a company's making bids for a stock, I would generally, this is what I would do, but it doesn't mean that's what you would do. You have to be comfortable with your decision. I would generally wait to see if there's someone else that could make an offer. Maybe there is, I don't know.
Well, it depends if it's a non-binding offer and all those sorts of things, but it sounds as if they've accepted it, okay, the offer. So, but is that Soul Pattinson hasn't dropped away an indication that they've paid the right amount of money, or not too much?
Looks to me
too little,
potentially, but sometimes once the deal is done, the share can fall at that point.
Correct.
So you just have to go and look at other takeovers and see what's happened and look at the history of stocks to know this. So
okay,
it depends on the company. Ken
should be happy with that answer, shouldn't he? I hope so.
I think so, but it doesn't mean you're going to be hanging on to any stock that you get. For long term, for example, because he has held on to Milton for quite a while, he said. But when he gets these new shares, if it does go ahead, you have to look at it on a on a day by day, week by week, month by month basis, and then make a decision about whether you're going to keep holding it. So I would have some strategies. Make sure you've read Dale's book to manage the stock, because it looks like this could be a good trend line stock, a trending stock, which might work well on trend lines. And you're going to tell me off with the crosshair, so I'll take that off. So yeah, I would manage that with a trend line eventually if he gets the shares.
Okay, I think Ken's had a good answer now. We can move on.
We have an email from Roger. Hello, Janine and Dale. It seems to me that selling well is the biggest skill in trading. Oh gosh, how smart. However, one size fits all stop losses seem a bit simplistic, especially when a stock is volatile. In my review of this volatility on AEF, I drew a bounding line along all of the lowest lows for the last 18 months and along the highest highs, applying this approach to see through FMG volatility since COVID is different. FMG has merely flattened out, but has gone down from the midline toward the lower bounding limit. This small fall is more serious than AEF's big fall. If you do the same thing with the newly lovely CSL, you would never tolerate any of these falls. Do you think my reasoning is good or bad, Roger?
Now, you sent through a couple of charts. Did you see
you
those?
modify that email? Because I was a little bit confused through that.
I know you were confused, but do you want to bring up CSL and I'll show you what he was doing? But
No, well, I didn't know you wanted to talk about it. I thought you wanted to just have a general discussion.
Well, I was going to have a general discussion, but I'm reading the email. I'm thinking probably people watching is probably a bit confused about what Roger's actually doing now. Can I say without being rude to Roger is that the way you've written it and what you've done on the charts shows it's not necessarily. I like what you're thinking, but I don't like the way you're doing it. Is that making sense?
No.
Well, it just shows he doesn't have a high level of knowledge in how he's applying what he's talking about, and I'll show you in a second. But I like that he's doing it, that he's trying to do it, and he's trying to think through it. I think that's to be really congratulated, but I don't think the basis behind it is it shows he doesn't have a high level of knowledge about the market and trading.
Okay.
Because we've constantly said, we don't have one stop loss fits all. We've constantly said, whilst we say in my book 15%, that's just one stop loss for a specific reason. We constantly say you need to have stop losses for each stock, and some stocks work well on some, and a stop loss, there's two types of stop losses. There's the initial one when you first buy, and then there's trailing ones, so there's different. And a trailing one can be adjusted. So we don't have a one size fits all approach, never have, never will have. So I agree with you there. But it's something we need to work on. But if we go and look at the chart, what Roger's actually doing, and if I just use my trend line, I'm not sure whether he's picked this up. For me, you know how I grab a trend line and I just draw along the bottoms here, and then and what he's done is he's just drawn it across the top, basically, and he's saying, well, it's vibrating between these two lines, and he's saying if it's coming down here, and this is talking about the midpoint and how far it's falling, thinking, well, should I be getting out of this when it falls down through here? So that's not a solid stop loss rule. And I know, look, you're screwing your face up, I know, but be kind to Roger. He's trying.
I don't know who's teaching this stuff, but it's so grey in terms of the thing that I love about our rules, they're black and white. You're either in, you're out, but this is, to me, makes it too hard.
And CSL, you wouldn't do this on CSL. It just wouldn't. And it's not about the volatility of the stock, Roger. It's some stocks are more volatile and some are less volatile, but volatility can't be predicted. But market volatility and stock volatility continually changes. Sometimes you'll find a stock that's volatile for a period of time, and then it'll be going back to the volatility will drop away. So it's about having a whole lot of the appropriate stop loss for the appropriate stock, and I think that's what I'm talking about here. Is I wouldn't use what you're doing. I wouldn't do it all. I just wouldn't do it all. It's not accurate, and you'll find you'll make mistakes more often than not. If that's what I'm saying.
I'm glad you said that.
Yeah.
Yes.
Okay.
Fantastic.
I was trying to be nice and supportive because I do think, I really, really strongly think it's fantastic somebody's thinking through this and not just blindly doing some other stuff. So I think he's great doing that, but I just think we need a lot more fine tuning.
Okay, great.
Yeah.
Next
Need some more
question.
knowledge. It's my question. Sorry. Here's me. The next question we have is from Simon. Good on you, Simon. He says, hi, Dale and Janine. I'm interested in your thoughts on C-Link. Haven't entered it yet, but looking and watching. Love the show and thanks for your input. Yours sincerely, Simon. That's so nice, isn't it?
Isn't
Sincerely.
it? Well written.
Yeah.
Now, C-Link has done amazingly well, so I think, he may have missed the boat on this one, given how far it's already run.
Is that a pun?
No, I don't make jokes like you.
C-Link pun?
No.
Boats?
I can't believe you got it.
I'm really surprised I got it.
You don't get my jokes at all because they're so dry.
Yes.
All right, C-Link Travel Group Limited, SLK. Now...
So he's missed the boat.
Oh, I think so. It's at the moment it's pulling back, and you don't know whether it's going to go up again. It would have to get up strongly above $10 before you'd know whether it's likely to make the next move up. That's my view on it at the moment.
Yeah, so he said he's been watching and waiting for a while now. Obviously, the time to buy that was many, many months ago, the stock. But right now, so you're thinking it's got more to go down, or what are you looking at?
Well, at the moment, it's pointing down. So you'd have to assume that the potential is to the downside at the moment. Like I said, if it gets strongly back above $10, it may start moving up again, and that would be the time that you could look at it.
Strongly back, what, above these highs or just above $10?
Look, I think if it closed on even the outside, what was that outside bar, the one
that
down?
That one, my point is on, is 1064.
Down from that?
Down from that.
Yeah.
One.
Next to that, yep.
1029.
So somewhere around there. So just above $10, somewhere 1020, 1030. Even if it closes strongly for any week above $10, then that would start to look interesting again.
Because that's its momentum really there. So I would think it's probably going to come back somewhere down around that $8 mark if it does fit this, because that was a pretty fast move.
Yep.
So I think it'd probably come back and settle down somewhere.
So just to be clear to everyone watching, that's not Dale's current trend line on the stock. It's just showing where the support is. That's what you're showing.
Yeah, I'm just saying that's probably where it might find some support before it moves up again. So sit back and watch. Keep watching it, mate, Simon. But I do love your email, and keep watching the show, and please keep asking questions.
All right. Now it's time we get into tonight's topic. I've been waiting for this one.
Oh.
Woolies, code WOW, rise like Wesfarmers following the demerger. In a shake-up last week, Endeavour Group was demerged from Woolworths, causing the share price to fall over 10%. Some Woolworths investors panicked when they saw the price drop, while others were wondering if this signalled an opportunity to get into Woolworths. We will share our view on Woolworths post the demerger and answer the question, will Woolworths continue to rise or fall, and is it time to grab a bargain? Endeavour Group Limited was Woolworths' liquor, hotels and gaming venues business, and investors received one share in Endeavour for every share in Woolies. For those who are holding Woolies and received Endeavour stock, you may be wondering whether to continue to hold shares in both stocks. We'll also answer this question and discuss the issues investors face in holding a new listing after one stock is split from another listed entity. So that's going to be quite involved, isn't it?
Yeah, it is. It's quite involved, Matt. To better understand how stock prices can be impacted post a demerger, we also thought we would share our thoughts on the spin-off of Coles Group from Wesfarmers. As we know, some of you are holding these stocks as well. So let's get into the charts right now. Now on your screen is... I know you're looking at me strange. I'm thinking, am I saying the right thing? Am I the wrong thing? Am I going to get into trouble?
On the screen is Wesfarmers, Coles, Woolies and EDV. Now, I don't have all the data for EDV at the moment. That's what's showing as blank. But
that's Endeavour, yeah.
Endeavour, I think, was it 11 point something billion dollars worth? I think it was about a quarter of the value of Woolworths or something like that.
Before we just get into that, I know I've had some questions of people saying, well, how do I find out about the deal and what happened?
Google?
Well, that's what I said. No, but you can go to the ASX and look at the announcements on Woolworths announcements, and you'll find all the details. If you're a Woolworths shareholder, you would have got information in the mail to you about what happened, what the offer was, and exactly all the timeframes and everything else. So if you were a Woolworths shareholder, you should have known about this weeks and weeks and weeks ago what was going on. But if you wanted to check out on this, all people...
They can go to the Woolworths website and look for updates. So they'll have a list of announcements to the market and also shareholder investment updates as well. So that's the real... I'd go there probably first.
That's a good place. But I mean, when we see big anomalies that happen, like we saw last Thursday, dropped, up one stage 15%.
Yeah, investors
First place we always go is to the announcements. It's always where you're going to find, probably 90% of the time you're going to find the answer there, because it's something's gone on and that's caused the stock to change. So I'll shut up now and show yours.
Okay, great.
I just want to make sure people understood it.
So looking here, I mean, we're not really going to see much from the share price moves, but I just thought it was interesting just to have a look for the month and see where things are at. So we can see that Wesfarmers is actually up 6%, Coles is up 2.7% and Woolies is up 6-point-something% as well. Endeavour is actually down 4.6% so far since listing. So that's interesting to see the change there. But let's look more importantly at the actual stock chart. So you can see here that Wesfarmers actually has grown since significantly. It's grown about 80%, I think, or thereabouts, since it actually demerged from Coles. Coles has actually grown, I can't remember if it was about 40% or thereabouts, but it's actually grown quite well too over time. But what can often happen, and just look what happened to the Coles shares at the point when it delisted. So they actually went down for a number of months first before the turnaround happened. So you would have seen almost no action for what's that? Probably about 8 months or something.
Yeah, well, that's May. So yeah, it was probably close to 6 months.
Yeah, so almost nothing, and then eventually it started to take off. But
I know we're getting a lot of questions about people wanting to say, should I buy Coles? Should I buy Coles?
We were
a lot of that kind of questioning.
Yeah, so look, I think in this situation with the Wesfarmers Coles deal, it was really important at the time because Wesfarmers, Coles was almost like a bit of a boat anchor for Wesfarmers because Wesfarmers were looking for a certain level of growth in the company, or that their capital was going to be able to return a certain level of growth. And Coles was almost holding that back, and they could use that capital to invest in more growth areas, which is what Wesfarmers are attempting to do.
Wasn't it also at the time we got Aldi making big inroads into obviously groceries and everything else in Australia, and we had that one from Germany, Kaufland, wanting to come in, and a few other things, a lot more competition in this space as well.
Yeah.
And that may have even influenced their decision at that time.
Coles and Woolies have both got a really strong footing in Australia, so that's not easy to shake off. Aldi's actually come in, but still that these companies are still really quite strong. So just looking at Woolworths share price now, the interesting thing about this is it looks all normal now, doesn't it?
It does look all normal.
Chart.
And people are going, well, where's the 10 to 15% drop that you're talking about, Dale?
Yeah, and that's because what we can actually show you is what happened, which is the awesome thing about using this software. So it will actually show you, we've got a filter here which we can ignore the dilution. So if there's any adjustments that happen, actually that's not helping me, is it? I've got to do it on each chart.
You've got to do it on each chart.
So that allows me to see side by side what's happening. So that's probably pretty useful. Let's do it this way.
Okay.
No, I decided just to do something different. So we can see this is what the chart looks like now, post the adjustment. But I can remember that years ago there was this small company that was trading on the exchange. Can't remember the actual stock company code and name. I just remember what the scenario that unfolded, and the stock price actually fell significantly because there was a corporate action underway. But a lot of people, there was confusion in the marketplace. So whether they hadn't properly conveyed this to the market or it hadn't been publicised enough, but people were trying to short sell a stock that was actually had a corporate action underway. So I don't know how that works, but eventually it took the company, I think, weeks before they actually advised the ASX of what the adjustments should be. And in that time, the stock price, the stock chart looked terrible because it looked like it was in a big free fall. But obviously Woolworths have come in really quick and made that announcement to the ASX, and it's all been fixed up and adjusted.
So just to explain to everybody what's happened. So obviously on Thursday,
Can you go to the daily chart, please?
I can go to the daily chart, yep. So on Thursday, this is what happened. So on Wednesday, it closed there. On Thursday, it opened up down there, and its opening price 36.71. So that's what actually happened.
Yep.
Our price that it actually traded at.
So this is because they're basically pulling a company out of the Woolworths company. So it's essentially creating two entities at the end. You've got Woolworths plus you've got Endeavour Group. So in a perfect world, there's no loss in there because the shareholders in Woolworths are getting shares in Endeavour.
In Endeavour Group. Yep.
But it doesn't look great on the chart, does it?
Yeah, so what happens is there's a difference between raw data and adjusted data. So what chart we've been showing you then puts it back to raw data, what actually did happen. But what happens is for us to analyse stocks, and it's really accepted, is we actually then go back in all the time on the data on Woolworths and adjust it for not having Endeavour Group in there. And so it might be a factor of 0.145, and we multiply or take that out of the data of Woolworths back in time to smooth the chart out. And that's the difference with your trader. You can get unadjusted data or raw data pretty much free, pretty much from a few different places, and there's some websites that give you raw data. But it makes you make mistakes when you're a technical analyst. So you really do need to pay. It pays to pay for good data or good adjusted data from a good company that does all those corporate
because technical
actions.
analysis is all about price pattern and time, and it's all about the form of the chart. So we've had the demerger, but it's important to be able to see what the original form of the chart was, so that then you can use that to actually go forward from there, because essentially it's still Woolworths.
Well, yeah, I mean, remember when BHP back in the 90s, it had three tops. One, I think they were $20, $20.05, $20.05, and now they're about $12 or $10. The pricing of that, because they split off One Steel and what was the other one? One Steel and the other one?
BlueScope.
And BlueScope Steel. So they were split out of it. So, because I know we've shown a chart of BHP and people said, well, BHP didn't trade at that amount. Yes, it did, but back in time.
Yep.
So it is important you have the right data making your charts look good. Let's move on now. We're going to show people...
Yeah, so that's Woolies, and at the moment, if you just look at just before we do, that's the Woolies share price heading above its all-time high, which is a great sign for any stock.
So I think right now, my thinking of Woolworths is it's great.
Yep.
You know, it's not necessarily an opportunity to buy because it's split off Endeavour Group, because a lot of people think, oh, it's dropped 10, 15%. That makes the opportunity. No. If Woolworths was an opportunity 2 weeks ago, it's still the opportunity today.
Yeah.
If it's still was a good stock 2 weeks ago, it's still a good stock today. We still love Woolworths. I still think it's got more to go. I do like it.
But
you're not going to pick up 10 or 15% quickly.
No, because it's not a stock that gallops away generally. I think a lot of the gains have been had on Woolworths. It'll give us some more, but I don't think it'll be a huge amount, like you say.
Yeah.
So look, Endeavour, if we look at that one just to see what's happening there.
Whoa.
And we've got almost no data, of course, because it's only a new listing. So
But this is telling us what the market thinks of this right at this very moment, isn't it?
yes. So okay, it started up here.
At $6.50.
Yeah. So where it opened, and we've now seen it drop down around that 4% that we showed on the watch list before.
Yep.
Now, we know that stocks will go up and down after their listing, but how do existing investors decide what to do with it if they're looking at a chart?
Well, I think it was valued at about $6 a share, roughly on...
I thought it was $5 something.
Yeah, it was high $5 or around $6. I can't remember exactly there. So right now it's trading at a bit of a premium to what it was expected to trade at. So it's possibly why it's floating down. But is it worth more than $6 a share right now, where it is now? Right now, the market's not telling us
What is the value anyway? Like a value can vary.
Correct.
How do you get an accurate value on that?
But if this is worth, because this is a pretty big stock on its own now, isn't it, in terms of market capitalisation?
It is, but just think about what's happening post-COVID.
Yeah.
You know, we're talking about hotels, gaming. No, actually, I've actually been reading today about people buying non-alcoholic beverages.
I know,
and
but
getting
people
into
are
that
drinking
area.
more. I know, people just a lot more. COVID's making them drink more.
Dan Murphy's is doing more.
I'm not calling anybody out on that, but at the moment, the market's not telling us that this stock is going to go bullish at the moment. They're not. So it's, to me, I think we should need to wait for a week or two on this to see what the market's looking at. If the market's saying, well, we like this stock, then it would be trading up.
Look, come on, there's more to it than that, because if you've got Woolworths...
I don't think so.
No, well, if you've got Woolworths, okay, so you've got 10 positions in your portfolio, say, which is how we position in the client accounts, and you've got, say you've got Woolworths shares, all of a sudden your position of Woolworths has gone down in value.
Yep.
And then you've got this little tiny share called Endeavour, and you've got roughly a quarter or a third of the value of what your original shareholding was. What are you going to do with that?
Well, I'd be holding it still.
It doesn't make sense to me to keep holding it, because it's such a small part of the portfolio. Unless you're willing to add to it. No, it's not. Unless you're willing to add to it, there's no point holding it.
Yeah, but you got one share at Endeavour for every one at Woolworths, so
but
yes, it
it's
won't
the value,
be worth
not
as
the
much.
number.
Yeah, the value, but it could be a good stock moving forward. Right now, it's not telling me it is.
Two things. I don't have any history on the chart at the moment.
Oh, get over that. Come on, it's a good stock.
I can use the chart of Woolworths to help me understand where this could go. That can give me some idea about it, but it's going in opposition to the direction of Woolies at the moment. So for me, look, what we're saying is often these stocks that are floated off can do well in the long run. But my view is, unless you're willing to take a position in it and build up your position to a standard position size, which I wouldn't be, because I can't chart this and there's no...
This is not a Coles. It's not that. It's, I mean, yeah, it's got Dan Murphy and BWS in it.
And it might not even fit whoever's holding this, it might not even fit the criteria for your portfolio anymore, given the size of the company. Because if you're just trading top 20 stocks or top 50 stocks, if this doesn't fit into that criteria anymore,
you're thinking I'd just get out.
I would get out.
I'm still sitting on the fence at the moment. I still think this could be an opportunity, but not right now. I'm just thinking I wouldn't get into it now, but if had Woolworths shares and I'd got this, I'd be sitting on it for a few weeks just to see what happens.
It's more paperwork. You would just make sure you don't get the dividend reinvestment plan.
Pay somebody to do your paperwork. If you're making $1 squillion like you do, paying somebody a few bucks to do your paperwork, it's not a big issue.
Jeez,
Don't be lazy.
I could go anywhere and I'm not going to.
Don't be lazy. No, but I'm just saying, right now it's not falling away. It's not going up. It's in that holding pattern. So, and you never know what's going to happen.
Potentially, you've been saying for ages that our market might peak very soon and start pulling back.
Yes.
Right? So if our market starts pulling back and you've got a stock like this in your portfolio that is just a new listing. Okay, thanks very much for that.
Okay. Well, I think it's about time that Janine and I stopped arguing. We get back into some more emails.
Okay, and I've got a big smile on my face. Let's get into our next email from Martin. Hi, Dale and Janine. I'm wondering why the ASX SPY 200 at 7,167 points, or the ASX S&P, so it should be SPX 200 at 7,167 is behind the S&P ASX 200 at 7,247. I think I just botched that up. If the former is to track the latter, does this provide any opportunities, e.g. arbitrage? Thanks for a great show. Regards, Martin. So he's talking about the actual index, the ASX 200 versus the SPY, which is the futures market.
Correct.
Yeah, so what are your thoughts on that?
Well, the SPY, the answer is no. There's no arbitrage in there because basically the SPY or the SPX is the share price index, which is the futures contracts on the top 200 stocks, which is called the XJO basically. So, and it's really just an indication of what the futures market thinks the underlying market, being the top 200, might do. So that's why you will never get them at the same price. They're always going to be either above or below, depending on whether they think the market's going to go up or going down. And generally, if you watch it often enough, you'll see you might put a factor around the difference between the two of them. Let's say if the SPY is like 1% above where the top 200 stocks is, or the S&P ASX 200 is, or the level of that, you might factor in a price rise of maybe half of that. But it is elastic because it just depends on the market volatility at the time and the emotions on the marketplace, but there's no arbitrage there. But again, of the game, you'd be buying futures contracts. And I wouldn't suggest you do that anyway, because futures is a really hard game, and a lot of people talk about futures, and I know a lot of people trying to trade foreign exchange on the futures market, and the whole market is not set up for retail investors, and it is fraught with danger. So I know you're not necessarily suggesting you're going to do that. So to me, that's smart, but it's a good question. I know it's a really good question, but when you're trading in the futures market, whether it's foreign exchange or like this, trading the SPY, you're trading against the big end of town who pay people squillions of dollars to be better than you and everybody else. And they know that they are so good at taking people's money, and they're moving that market around to entice people to trade. So you do really need to understand what's going on there. But I think it's a great question. All right, look, I think we'd better get into the next question now.
We've got
another question. Is it mine again? Geez, it always comes back to me, doesn't it?
You're doing a lot of talking tonight.
I know. I never shut up. The next email is from Amber, who says, Dear Dale and Janine, thank you for the wonderful shows. That's our pleasure, Amber. I learn something every single week. Would you mind taking a look at Ramsay Healthcare for me? I've been watching it and noticed a change. It has changed from moving back and forth between $62 and $70 since March 2020 to a tighter pattern along the bottom of the original range in the last few weeks. I would love to know if this means anything significant and be grateful for your thoughts. Many thanks, Amber.
That's a really interesting question.
I was thinking that
myself. Were you blown away by that one?
I was. I thought Amber is awesome.
Look,
I don't know whether analysis is awesome, but it sounded like it was good.
I just want to look at the long-term chart first. So we'll just look at a chart of Ramsay Healthcare. Now imagine, if you bought the stock back here and you're still holding on to it, that was November 2008. And, through the GFC, $9.87 and now it's trading up around $60. So I thought just a nice thing to reflect on there. But look, the stock has done nothing for a long time. So, you know, you could even go back to this point here in March 2015. It's gone up and down and all over the place. COVID sort of tried to wash out that, and now it's attempted to come back, but it's still stuck in that band almost.
Yeah, it is. And Ramsay can do that because it did that, as you showed, back in 2000 and whatever else. It can go sideways for a period, but again, eventually it breaks out. And what you see on the marketplace, I'll put my glasses on, it's about markets only move when you get
you put your glasses on, but they might not have glasses. So how about just showing the whole monthly chart for them?
Okay, yes, sir, ma'am. If I use, where's my trend arrow? Where's my trend arrow? There it is. Basically, markets move into disequilibrium, which means there's one side overtaking the other side. There's more veracity on one side. Then they move into an equilibrium period. Then they disequilibrium again, then equilibrium again, and then disequilibrium again. And then they reverse. It does the opposite. So now the momentum goes the other way, then equilibrium again, and then disequilibrium, equilibrium, and disequilibrium. So that's roughly, now it's not always going to be like that, the pattern, but you get the point. This point of time when we're seeing through, from right back through there, from 2015 to now, pretty much there's a lot of equilibrium through there because prices haven't been moving a lot, and yet it has been moving in a reasonable range. You can see there's some big moves of 50%, but you get breakout only to come back again. But it's not falling away in a big long downward move, but it's not rising. So, you know, is Ramsay waiting for the fundamentals to catch up to it? What is it doing
I think
at this point in
what
time?
Amber's coming to is the fact that it's been trading between that range for some time. And is it getting closer to a point of breaking out because it's changed? There's a smaller move that's consolidating at the bottom line. So if we can go to the weekly chart now.
Yeah, it is. And so, I mean, obviously Ramsay is just this brilliant stock, but it does go sideways for a period of time. So if I look at this, if I go and use my little time tool, I can go through from about to here to there. There's 44 months it went sideways, roughly 44 months. If I go use the same little tool and go from roughly here to here, where it's like 74.
You've been a bit rough in your, it looks the same, but it isn't because anyway, what you're saying is it can go sideways for quite a few years, and in this case, it's quite protracted. But can we just go to the weekly chart now and talk about what Amber was bringing up?
All right.
So this is what she's identified, which is great, and now we're seeing this small consolidation that's happening down here over the last probably month and a half. So it's really trying to push this line to get off that line, but it can't at the moment. It's that high there was higher, and this high here is lower. This one of the week ending, what is that, 25th? So that's last week, okay? So because of that, until the stock gets through this high, we don't know whether it's going to rise. And it might still get stuck in this sideways move when it attempts to come up to that line. So that's the real challenge with it. So even though it might start to push up off that low, and that's a good sign if it holds. So if it goes through the low, I think there's a real risk to the downside. But if it goes above last week's high, chances are it's going to go up to this high again.
And you're stuck again.
Stuck again potentially, but if it goes through that line, potentially it could keep going to the all-time
how do
high.
you trade that? That's the thing, is you've got to have some pretty sensitive rules to get in and get out of it.
Well, you could only trade that off the bottom, you know, short term off this low if you were planning on trading that range, but you've just got to look at what the upside is versus the downside risk. So, you know, there's not much in it. There's 5 or 6% in it, and if it falls through this line, you don't know what your downside risk could be because it depends on how fast it falls away. So, you know, I think we just need to answer her question, which is...
Is it significant? No.
Is it significant? Not at the moment, no.
No, and I wouldn't read too much into it, Amber, but at this point in time, it's not that exciting to us. Can I tell you a story?
Yes, please.
Am I allowed to tell you a story?
Go for it.
I was having a chat today to my contacts in the US, which I am wanting, or I aim pretty much do quite regularly. I'm talking to people in the US. And I was chatting to this gentleman who did a coin offering of a company in the US, which is of a company that's making money. It's actually a physical company making money.
Cryptocurrency you're talking?
Well, yeah, it was a cryptocurrency. So what they did was you can use cryptocurrencies, you can do an ICO, so initial coin offering, and do that on a crypto exchange to raise money to put into the company, to raise physical dollars, US dollars, to put into the company to help grow it, because it's a startup company, but it is making money.
Right.
Brilliant idea. And I'm not going to tell you who it is because...
Just tell us what happened.
I'm going to tell you what happened, okay? So basically, when I found out about it floating, or my friends were telling us it was floating, you could buy the coins at about 45, 55 cents for the float, just before the float, or listing on this exchange. Now, the exchange, they thought the exchange they were listing on was in the US. It was a US-based one, but then since it's floated, they found out it's not in the US. It's owned by some people in Vietnam. So it's not owned by the people they thought owned it. That's one thing. But what a lot of people don't understand is the crypto market and crypto exchanges are largely completely unregulated. It's not a regulated thing, the exchanges. So whilst there's some sort of understandings, there's no regulation or no government regulation behind all that. So they've listed the coin, and it actually jumped from about 55 cents to about 75, 80 cents for the coins, and then it fell away. And then it kept falling away. And then it kept falling away. And they're going, this is a company that's worth more than the 55 cents. It's worth $1 plus. And so they couldn't really understand what was actually going on. And the founders of the company then put some money into it, bought some of the coins, and pushed it up. They doubled the price. And then it started to fall away again, and they just couldn't figure it out. And what's actually going on, so they did a lot of research onto it, and these are the people that I know, and they're very, very, very knowledgeable in this sort of space. What they found out was the exchange was shorting the coins. So what the exchange wanted to do was keep driving the price down. But why is, if you want to do a coin offering, you have to give money to the exchange to get them to do that. So they had to give the exchange $300,000 to list the coin. Now the exchange, basically that says if it's trading at X price, you get your $300,000 back, because obviously at a certain price, that means there's been a lot of trading on it and they're making money from the trading because they take a little clip of the trading. But if it's not trading at that price, then they keep the $300,000, the exchange does. And they found out that this exchange is keeping all of those $300,000 that they're charging all these people to list their coins on this exchange. So what they do is then start shorting it down and down and down. Now, the price of this coin is now at 2.3 cents.
Jeez.
And it listed at 50, and people were buying. I looked at it at 45, 55 cents. Before it floated, and I thought, do I buy it? Do I not buy it? I know the people behind it. I trust them. I like what the company's doing. And I went, no, I don't have enough time to do enough research, so I'll just leave it for now. And in the back of my mind going, well, you can buy companies after the float's cheaper. I thought, well, if I do my research, I can buy it later on, even if it's $1, and it's still going to be a good buy to me. Rather than a good buy. And it's turned out to be a good buy, but it's interesting that it is worth more. Now, they've got a plan in place. They're going to be listing it on another exchange. It's a more reputable exchange. They've done all their research, but it just shows people if you don't know what's going on in the marketplace. Things get manipulated all the time, and that's why we say to people so often, trade shares because you're in a regulated market. But don't think Bitcoin's not manipulated or any coin's not manipulated. They all are.
Yeah.
We just have to be careful of it. But now we need to get back to our questions, don't we?
I think we do. Moving on
Did
is
you
a
like
question...
my story?
I have to say yes.
Yeah.
Moving on is a question from Liam. Hi Dale and Janine, do you believe investing what you can each week is the best strategy for someone new to investing? Or is investing a set position at the start the way to go? To put it simply, should I add to my positions on a regular basis when I begin investing long term? Go Cats. Regards, Liam.
Well, that would have been tough for you to say, go Cats.
Yeah.
You're a Bomber
Now I've
supporter.
forgotten the question. Why'd you bring up the footy?
We pay the Bombers this week, don't we? The Cats. Get ready to lose.
Oh, jeez.
Okay.
I'm not even going to go there.
You can answer, Liam.
Okay.
I've been talking too much.
So we're talking about position sizing,
Yes.
aren't we?
Well, position sizing and compounding
And
return by adding to the positions.
So it's like adding to positions has got to be done in a strategic way, and that's really a challenge that a lot of people find. It's hard when you first start out, isn't it, Dale? Because you know, some people have small amounts to invest. So
Yes.
it's the thought, and you talk about it in your book as an approach as to how people can do this: start small and then get, say, 6 positions, and then start building up the positions a little bit. But look, that's great if you've only got a small amount to have in each position. So, you know, you suggest 6, don't you, generally? Try to get it up to 6 holdings minimum first, and then keep building it to 8 to 10 or 8 to 12 positions over time. So look, sometimes people say, well, look, how do I start? Do I put $1,000 into each? But I would say to people, don't even start to invest until you've got about 2,000. To me, that's a good starting point. But in terms of position sizing, that's a big topic. And we could talk for quite a while about that. And I don't know if you really want to get into that, do you?
Well, not tonight. We don't have enough time to do it tonight. But it's about it also depends on how much Liam is saving on a weekly basis. If it's like $50 or $100, you can't just go out and buy another $50 or $100 worth of shares. It's just the cost is. And
then you've got the issues with accounting issues.
Yeah.
You know, it's like doing the dividend reinvestment plan, which we talk about to people. Don't consider not doing it simply because you end up creating an accounting nightmare for yourself with all these little additional positions that you take on. So it's about taking the biggest position you possibly think you can and then building on that. So how long does it take you to save $1,000 or $2,000 and then how long is it going to take you to save $1,000 or $2,000 for the next one?
There's a couple of answers to that. One is I know there are products out there where you can buy exchange ETFs and just put in $50, $100 at a time and build it up as a young person starting out.
That's probably a better option.
And that's a good little option. The other option is looking at, I know years ago I used to say to young people, hey, look, if you can afford $50 a week or $100 a week, well, and I did this myself as well. You could borrow money, like whether it's a margin loan or whether it was a personal loan, and you can get personal loans at a reasonably cheap price now, 7 or 8%, sometimes even cheaper. And you can borrow that money and borrow $10,000 and your repayment might only be $50 a week because the interest rates are low. Then you put $10,000 in and then you're forced to keep pushing that $50, $100 in and you pay your loan down and you've got $10,000 there and then you can do it again if you like to do that. So there's another way.
It's a forced saving.
It's an enforced saving, so you have to pay that every single month.
Look, I would say if you've got parents, Liam, go to your parents and say, look, I'm wanting to invest in shares and I've read Dale's book and this is all the research that I've done and this is the strategy and I've got it planned out. This is what I'd like to do. And I was wondering if you could loan me some money and match me dollar for dollar. So if I put $2,000 down, then you put $2,000 down. So that way you get to your goal quicker. So you only have to buy 3 shares. Your parents buy the other 3 shares to get to your initial 6, and then keep building until you get 8.
Oh, the bank of mum and dad.
Yeah,
I already go around to your mates and say,
way.
can you lend me some money for a cup of coffee? And you do that for 100 mates, and then you go and buy some shares with that. What do you reckon?
Don't be ridiculous.
I reckon that's a good deal.
No, I don't think
sure
it's good at all.
If he's nice.
Forget that, Liam. You might borrow it for the cats, but I don't think you should listen to that.
Well, just stand outside Cardinia Park or whatever they call it now with your hat saying, okay, support the cats, and you might get some money.
Okay.
Cool. But anyway, well, that's our thoughts on position sizing and adding to your positions for Liam. But thank you for asking the question. Now, we have had some great questions tonight, so thank you to all who sent them in. Now, remember, this is your show, and we are guided by your questions as to what you wish to know. Now, I do urge you to send in your email so that we can help you, as it's no benefit to you just asking about whether you should buy a stock when the market is bullish. You really do need to know the why, the what, and the how. And I see so many sitting on the sidelines procrastinating. Now, I don't know about you, Janine, but in my experience, procrastination is never a good thing to do. It costs people so much money. Now, I know some of you watching know exactly what I mean. However, you're still holding yourself back from doing what you know you should.
We chat to people all the time who say they should already have taken a step forward in some way. And if you are saying to yourself right now, I should send in a question or I know I should enrol in a Wealth Within course, then just do it.
Well, it's the Nike thing, isn't it? Now, your future really is important, and having the future you want is all a matter of making the right decisions today.
Now, if you've been thinking about trading and want to learn properly to ensure that you do it the right way, then you can call our team. Remember, they've been where you are and they've studied our courses, so they're more than happy to spend some time with you to help you work out the direction that you want to take. And there's no obligation, and you'll receive helpful information as well. So all you need to do is call 1300 858 272.
Okay, well, that's it for another show for tonight. We do hope you not only enjoyed what we presented tonight, but really did get a lot of value from our answers to your questions. So now it's your turn to help us, and right now hit that subscribe button to say thank you to the team who put in the big effort to bring you this show each and every single week.
Also, remember to put this show into your calendar to join us right here on the Live Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you'd like to have your question answered on the next show, send an email to info@wealthwithin.com.au and type Wealth Within Live in the subject line. Remember, you must email, and you must do so before 3 p.m. on the day of the show.
So email, because Janine told you to. As always, thank you for joining us, and we hope you have a great week, and we look forward to you joining us again next week. But for now, goodbye, good luck, and good trading.
Bye for now.